Big numbers, y'all. Big numbers. Wow. What a freaking blowout quarter that was. Q1 2022 for Tesla just got reported yesterday, Wednesday, 4/20. And what I like to do in this video is sit down, quickly go through some of the big numbers that were reported, and then try and extrapolate out what this year could look like from an earnings perspective for Tesla in 2022. And we'll also take some of the nuggets that were dropped in the earnings call and the earnings report to try and figure out where the earnings could be for the next year, for 2024, as well as 2025. So let's go ahead and get started. As you can see in this chart, Tesla reported records in every single one of these categories in total revenues, total gross profit, total GAAP gross margin, income from operations, operating margin, adjusted EBITDA, and adjusted EBITDA margin, as well as deliveries and other metrics as well. One of the big things I want to highlight in this report is Q1 2021 expenses versus Q1 2022 expenses. As you can see in this chart, Tesla had $1.6 billion in operating expenses 1 year ago in Q1 2021. If we compare that to Q1 2022, you can see the operating expenses went up by about $200 million to $1.8 billion. But the really truly ridiculous thing here is that Tesla added roughly $3 billion in income while upholding the same level of operating expenses. The income from operations went from $594 million to $3.6 billion while only increasing their operating expenses $200 million. This is the primary reason why operating margin went from 5.7% to 19.2%. In one of my earlier videos, I highlighted how Q1 2021 is going to be a watershed moment for Tesla. And I think this is step one of that watershed moment actually becoming true. As more and more people, especially in the finance media, realize just how big of a powerhouse Tesla is from a profitability perspective and ability to generate cash, especially in an environment where interest rates are going up and other legacy automakers are losing sales, this proposition is extremely attractive from an investment perspective, not investment advice. Now, with these numbers in mind, let's sit down and make some safe assumptions around what the rest of the year could look like, and then also extrapolate these into the future through 2025 using the data we got from the earnings report and the earnings call yesterday. Based on the earnings call, Elon gave us guidance that said that Q2 of this year is going to be roughly the same as Q1 because of how strongly Shanghai is coming back. If you didn't know, Shanghai had some COVID lockdowns in the last few weeks that impacted the factory for Tesla in that location. But even with these shutdowns, Elon and the Tesla team expect deliveries to be roughly the same in Q2. Then the other piece of guidance we got from Elon and the Tesla team is that Tesla is looking to do about 1.5 million units this year, which is roughly a 60% increase if you compare 2021 to 2022. I've gone ahead and put together a chart here that describes what this trend could look like for the rest of the year. I assume for Q2 that we're going to have roughly the same financials based on the guidance that we got on the call. And then for Q3 and Q4, I've taken some liberties to figure out what the ramp could look like from a quarterly perspective that would get us to 1.5 million units for the rest of the year. As you can see here, I'm assuming about 380,000 deliveries in Q3 of 2022 and roughly 500,000 deliveries in Q4 of 2022. Now, this would strictly be S, X, 3, and Y sales. If we total these 4 quarters up, we get 1.5 million units. Now, let's take that and figure out what the earnings could be using those metrics. If we assume the same automotive gross margin in Q2 based on the guidance that we got on the call, and then we assume a very slight uptick in Q3 and yet another uptick in Q4, we arrive to a total car gross margin for the year of 22 of roughly 33.6%. If we take the deliveries that we just briefly talked about, that gets us to 1.5 million, and then we assume a slight decrease in average selling price due to the higher mix of 3 and Y cars that will happen to reach that 1.5 million units, we arrive to a yearly revenue of roughly $78 billion. One of the key things I want to do for this model is to keep things conservative. Even though the numbers by the end of it are going to look ridiculous, this is still a conservative model. And if you're enjoying what you're seeing so far, I would love it if you throw me a like on the video. It helps the YouTube algorithm push this out to more people. Thank you very much. The other thing to keep in mind is that Tesla has some sales that are non-automotive. So things like solar panels, batteries, merch, service appointments, things like that. And so we need to make sure to include that in this model. For this model, I've just assumed the same level of revenue for the remainder of the years through 2025, which is roughly $8 billion a year. And so if we add this to the car revenue of $78.6 billion, we land to a total revenue number of roughly $86 billion. If we apply the car gross margin to the car revenue of $78.6 billion times 33.6%, we land at a car profit for 2022 of roughly $26.4 billion. If we do the same exercise for the profitability as well that we described for the remainder of the business, you can see that Tesla loses a little bit of money from the rest of the business as compared to the car business. If we factor this into the equation here, we lose about $400 million from a profit perspective, but we still have $26 billion in GAAP profit for 2022. Now, here's where the magic comes in of Tesla's business model. Their operating expenses, which is the thing that we reviewed earlier in this video, comparing Q1 2021 versus Q1 2022 operating expenses. The thing that's going to happen here is for the rest of the year, these expenses are barely going to go up, but I'm still going to assume that they're going to go up at least 5%. And so for the full year of 2022, if we follow some sort of ramp from Q1 2022 through Q4 2022, I'm assuming roughly $7.7 billion in operating expenses, which lands us with $18.3 billion in net income, giving us an operating margin of 21.3%. If we apply a 100 price to earnings ratio or PE to this net income number, we land at a market cap of roughly $1.8 trillion for 2022. Now, of course, the market could give Tesla a lower PE, but if we take the current PE levels, given the growth of the company, we land at 1.8 trillion, which is roughly an $1,800 stock price if we don't account the upcoming split that's going to happen to the stock. Now, here comes the fun part. How can we take the data that we've just put together and the guidance we got from the earnings call and figure out what 2023, 2024, and 2025 are going to look like for the stock? For 2023, the key thing to keep in mind is that Tesla is going to exit the year producing roughly 500,000 cars per quarter. And if we assume a 20% increase in these deliveries per quarter, we land at about 2.4 million cars for 2023. The reason why I assume 20% is because Austin and Berlin will still not be fully ramped up by the end of this year. And then you also have to assume that Tesla is building some capacity increases in Fremont and Shanghai, given that Berlin and Austin are going to be able to do more out of their facilities, which is going to alleviate the pressure that Shanghai and Fremont have. It's going to allow the staff there to reconfigure the lines and to figure out how to make cars more efficiently, which is obviously going to give us more cars from those facilities. One could argue that a 20% increase from this perspective is too low, but again, I want to be conservative. And 2023, as we all know, is the year of the Cybertruck. Cybertruck's finally going to launch. So for 2023, I'm assuming roughly 50,000 Cybertrucks. Yes. You made pizza?
No. It's quiche.
You made quiche? From scratch? Mm-hmm. What the fuck? How did you make this?
Bye.
This is so banging. Okay. I better hurry up and finish this video because I want to eat that quiche. Oh my. That's so funny. If we continue to assume a $50,000 average selling price for S, X, Y, and 3, and then we assume an $80,000 average selling price for Cybertruck for those first 50,000 units, then we arrive at a car revenue number of $120 billion. And I'm assuming the same level of gross margin that we exited at Q4 of 35%. If we take those two things into account, and again, we assume the same level of revenue from the rest of the business, that solar and everything else that Tesla is doing, we arrive at a total revenue number of $127.5 billion, which equates to roughly $41.6 billion in profit. And after backing out operating expenses of about $8.1 billion, which accounts a 5% increase from 2022, we arrive at a net income number of $33.5 billion, which nets us out to a 26% operating margin. If we take that $33.5 billion number and we apply 100 PE, given Tesla's growth rate for the coming years and its product roadmap, we arrive at a $3.4 trillion market cap, or roughly $3,400 stock price. Let's keep going. In 2024, we'll assume the same gross margin, given that Tesla is going to continue to find efficiencies and they're going to be ramping a very high priced product in the Cybertruck. We assume a 35% gross margin, which will give us $156.7 billion in car revenue if we assume roughly 3.16 million cars sold in that year. I've assumed a 15% increase in production for S3, X, and Y, and I'm assuming 150,000 Cybertrucks made in that year. Now, in 2024, the guidance we got in the earnings call is that Tesla is going to introduce the robo-taxi by that year. The robo-taxi is intended to be the cheapest car that Tesla will make. And so the assumptions we have to make here is that it's going to be the cheapest car that Tesla is going to have in its fleet. But the difficult thing is really understanding what the full self-driving model is going to be. In other words, if this car is truly meant to be fully autonomous, what does that look like from a price perspective? The other thing to also keep in mind is that robotaxis are meant to be very, very, very easy to make. The only way to make a really cheap car is if it's really easy to make. And if it's really easy to make, you should be able to make a lot of them. For this year, for 2024, I've assumed 250,000 robotaxis made at an average selling price of roughly $30,000 per unit. And the key thing to remember here is that $30,000 number is probably not including the full revenue potential of full self-driving. And so for this model, I want to remain conservative. So I've only assumed that Tesla is going to be able to make $30,000 per each robotaxi that they make. And so if we retain the same gross margins that we've had in years previous, again, by introducing a higher mix of Cybertruck and continued efficiencies in every single factory that Tesla makes, we land at car revenues of roughly $156 billion for the year, total revenues of $187 billion, car profits of roughly $55 billion, and total GAAP profits of roughly $54.5 billion. If we assume a continued 5% increase in operating expenses, we land at a net income of $46 billion, which is roughly a 24.6% operating margin. If we apply 100 PE to this $46 billion number, we arrive at a market cap of roughly $4.6 trillion, which is roughly a $4,600 price target. And then lastly, let's do it one more time. Let's go to 2025 and see what this could look like. For S3, X, and Y, I'm assuming again a 15% growth in deliveries. I expect Cybertruck to be at roughly 300,000 units per year out of Austin. And for the robotaxi, I'm assuming that it's going to reach about half of the S3, X, and Y total production by 2025, which again, we have to remember, robotaxi is going to be very, very, very easy to make. So it's reasonable to assume that they're going to reach much higher levels way quicker than the rest of their fleet. This puts us at roughly 5 million cars sold per year in the year 2025. If we compare this to 2022's expected deliveries of roughly 1.5 million, and we figure out what the compound annual growth rate is, or CAGR, we reach a roughly 50% growth rate year over year from 2022 to 2025. If we continue to assume a $50,000 average selling price for S3, X, and Y, a $65,000 selling price for Cybertruck, given that by now they probably have way more cheaper models in the mix, and we continue to assume a $30,000 price target for the robotaxi, and we continue to assume that gross margins will remain at roughly 35%, car revenues will be $226 billion, total revenues will be roughly $256 billion, with a car profit of $79 billion, and total GAAP profits of roughly $78.7 billion. If we continue to assume a 5% increase in operating expenses, we land at a total net income of $69.7 billion. If we take that $69.7 billion number and we apply a 100 PE, we land at a market cap of $7 trillion, which is roughly $7,000 per share. Now, the fair question here is, well, do you think that 100 PE is going to actually work here? 100 PE seems really, really large for a well-established company. And by then, if Tesla is really delivering 5 million cars per year, they're going to be one of the largest car manufacturers in the world. These large companies roughly trade around the 20 to 30 price to earnings ratio in the technology sector. But here's the deal. What are the things that I'm omitting from this model? I'm not including any semi sales. I'm not including any van sales. I'm not including any potential recurring revenue from full self-driving. I'm not including any growth in solar. I'm not including any growth in battery storage. And there is no bots. There is zero bots. On the earnings call, Elon was very clear about how surprised he was at the reaction of the bot. He thinks that people still do not understand the incredible impact of this technology. And in that same call, he stated this: "Those who are insightful or who listen carefully will understand that Optimus ultimately will be worth more than the car business and worth more than FSD. That's my firm belief." If Tesla today is truly only 5% of the way there when it comes to to making cars. They made 1 million cars last year. They want to make 20 million cars within 10 years. And then you layer on full self-driving, the bot, and everything else that we just talked about, the van, the semi, solar, God knows what else Tesla's working on. What could the number really be here? What could that price target really be? What could that market cap really be? What could Tesla's total impact to society be? What an incredibly exciting time. It really does feel like Tesla is just getting started after all these years, after the crazy increase in the stock price and being at $1 trillion market cap. And still to this day, it feels like we're just getting started. I'm hopping on the train. Who else is hopping on with me? Thank you so much for watching the video. If you want to support my channel, you can join my Patreon using the description link below, or you can also join the channel by clicking on join right below this video. And lastly, I have a special link with Athletic Greens, which is a supplement that I use every single morning, which helps with my digestive health, plus other health benefits. If you're interested, feel free to click on the link below. Thank you so much for watching, and we'll see you on the next one. I'm gonna finish this quiche. Bye-bye.